What is the profit margin per liter barrel in fuel trading? Let me tell you a story that might sound just like your dream. In 2023, a young graduate named Aisha in Lagos wanted to break into fuel exports business. She didn't have millions to invest. She didn't have even $10,000. But Aisha was good at networking and making deals. She started reaching out to refinery contacts and buyers, offering her skills as a fuel trading broker. No warehouse, no trucks, no big bank loans, just her phone, WhatsApp, and determination. Her first successful deal, she secured a buyer for 10,000 barrels for diesel from a mid-sized refinery. As a broker, her agreed commission was 20 cents per liter, almost $1.20 per barrel. For that shipment, she earned $12,000 in 3 weeks with zero upfront investment and no risk if prices drop. Aisha kept scaling her deals up and soon she was making between $8,000 and $20,000 a month just by connecting sellers and buyers. Hi there, I am Rizwan Khazi and in this video I am gonna explain exactly how beginners without huge investment can earn as brokers in fuel exports business. I will share real profit margins per liter and barrel, reveal how deals really work in 2026 and give you simple steps for success. So watch until the end, and if you want my full masterclass on oil and gas exports, click the link in the description right now. Now first, understanding broker margins, the real numbers. First, what's the typical profit margin for brokers in fuel trading? In 2025, most broker agreements range from 10 cents to 25 cents per liter depending on product, location, and deal size. For crude and refined products, you'll often hear about margin usually between $1 and $2 per barrel. Now here is the challenge, finding reliable partners and negotiating a fair commission. Many new brokers get squeezed out by aggressive traders or lose their cut if they can't get deals over the line. Now here are the instructions for success for you. Always get your commission agreement in writing before introducing buyers and sellers. Use escrow or trusted intermediaries whenever possible. Target deals that move from 10,000 liters up to 100,000 liters per shipment. These bring you real, repeatable earnings without needing your own capital. The average marketing margin for petrol has surged to around few dollars per liter in 2025, which means brokers can easily earn a few dollars if they position themselves well in the supply chain. Start small, scale fast, case studies from the field. Now let's move on to another angle of this problem. In 2024, a team of 3 brokers in Mumbai started out trading only 2,000 liters of diesel each week. Their initial earnings were small, about $300 per deal. But as they built trust and expanded their network, they closed deals for 12,000 liters, then 50,000 liters. Their margin stayed steady, 15 to 20 cents per liter. So with each bigger shipment, the commission climbed. Within 6 months, they were earning over $5,000 a month, still with zero upfront investment. The challenge for beginners is breaking into that first circle, finding buyers and sellers willing to trust a new broker. Now here are my instructions for success. Use LinkedIn and local business networks, show your professionalism and always be transparent about your commission. Focus on reliability, fast communication and understanding local regulations. Many traders in 2025 value relationships even more than the industry experience, especially with new export markets opening up. Now the next one, market changes, technologies and new opportunities. But that wasn't the only issue brokers faced in 2025. Prices move daily, competition grows, and online platforms are changing the way deals happen. The best brokers now use digital contact platforms and automated escrow systems to close deals in days, not weeks. Margins per liter barrel have stayed healthy in 2025, mostly because supply chains remain fragmented and personal relationships still drive trust. But commissions are always at risk and more players entering the market, so you must keep learning. And the last challenge, protecting your commission if prices suddenly drop or supply falls through. If you skip the right paperwork or try to shortcut the process, it's easy to lose your hard-earned percentage. Therefore, never rely on word of mouth alone. Use real contacts, keep records, and work with reputable logistic partners. Stay updated on global crude prices. They have held between $60 and $70 per barrel in 2025, but local marketing margins change every month. Successful brokers adopt fast, learn digital tools, and keep their contacts strong. So now you have seen how profit margins per liter and per barrel work for brokers with real beginner stories and clear strategies for success. But this is just one part of building your fuel exports career. In my full training course, you'll get step-by-step lessons on DLC, SBLC, CIF, FOB, compliance, buyer mandates, and much more. Don't wait. Click the link in the description and start your oil and gas journey as a broker today. See you inside in my full course. Thank you.